Today we are going to be talking about savings. My name is Flois Majeski. I'm a real estate agent with Broker Nation Real Estate under the Nino Group, and I have a co-host with me, Jennifer. Jennifer, welcome.
Thank you, Flois. First of all, I want to welcome everybody that has joined. It does that is the biggest step. That's halfway through half the battle, right? To join these videos and these meetings in order to learn. My name is Jennifer Kurz. I'm with Round Point Mortgage. I run the Avatal team at Round Point Mortgage, and I have about 10 years in the industry. Today, we're going to discuss, like Flois said, how to save. What are the sources that you can use, how to go about it, and what are the best practices? The key takeaways for today: the importance of saving money, best practices, what are the acceptable sources of funds, acceptable concessions and gifts. Concessions are funds given by third parties, and how paying off debts affects you. Saving money and why is it important? With your purchase, there are a couple things that you're going to need. In more cases than not, unless you're a veteran, you're going to need a down payment. Okay, the minimum down payment as a first-time buyer would be 3% down if you qualify for the conventional program, or 3.5% down for FHA. All right. In addition to the down payment, there's going to be closing costs, and the closing costs include all the settlement fees. It includes what we call escrows, and in another episode, we'll go through that, to the terminology so you guys can understand. But basically, your escrows are funds that we have to collect in advance in order to cover taxes and insurance. Also any additional fees for your loan purchase, should you decide to purchase discounted points for your interest rates and so forth. Upfront costs of purchasing. When you purchase a home, you're going to have inspection costs. Inspection can range from $250 all the way to $450 or more, depending on how many inspections you need to do on a property. And inspections are very important because essentially, with the inspection, you get the reports that are needed for you to get the homeowner's insurance. Okay. And also it gives you an idea of what the condition of the property is and what you need to do to the property, or what you need to request the seller to take care of in advance. Upfront cost would be that, and then be also the appraisal. That's definitely an upfront cost that you're going to have. The appraisal could range from $490. It can go as high as $700, sometimes more, depending on the size of the property. Or if we're getting rental, like if you're buying a property that generates rental income, that's another appraisal that we need to do as well. So these are upfront costs throughout the purchase. Okay, so having those funds available in addition to the down payment and closing costs are very important. And then last but not least, repairs and renovations. Every house, even though you purchase a brand new house, from the box, for lack of better words, you go to a new development, you get this new home, you're more than likely going to have to do certain things to the home. Whether it is, you're going to be painting the home, or maybe you just don't like certain things that the home came with. Maybe it came with carpet and you want to change it, so taking into account those repairs and renovations might also be an important factor in your aspect of saving money for your purchase. Okay. I want to talk about some of the best practices for the funds that you're using towards your down payment and towards your closing costs. Any of the funds that we need to account for, which are those down payment and closing costs. Those funds need to be accounted for and sourced. Okay. So ideally, it's important that you put all your funds in an American savings account. And I specifically state American savings account, or American account, period. It doesn't have to be necessarily a savings account. I say American because we have, we're in Florida. So there are a lot of people that have family members that want to give funds to help with the purchase. Or maybe I have a specific client right now receiving an inheritance from the UK. So these funds, we need to see these funds. We need to see them available already in your account. So it's important that that if this is the way you're going to, you're going to purchase your home, you're going to use funds from out of the country, you need to have those funds inside of an account. Okay, here in the US. You cannot use funds that were cashed under the mattress that you've been holding for so many years. These funds, we can't source them. We can't source when they came from. So you gotta be, I'm gonna call you, FBI agent, call me the FBI agent too. You have to look at this as like, okay, how am I going to link these pieces together? Where does this money come from? And is this money that we can use? If we can't source it, we can't use it. I would say if you're going to start purchasing and you're using funds that are put away, under the mattress, start depositing these funds and put it and hold it there for a certain period of time. If you need more funds, find out what to sell or who would be generous enough to help. Okay. I mentioned already selling a vehicle. I've had clients do that, sell the vehicle to make some money. I have a lot of clients that have family members that give them gifts. It has to be a relative. So, on the form, you will have to indicate what kind of relative the person is in order for this to happen.
We are in the Bitcoin, Cash App, Venmo era. When COVID hit, everyone started a business. They were doing something. They were either cooking, they were making jewelry, they were, selling and reselling stuff. And there's a high volume of these money transfer apps.
For example, let's start with the Bitcoin. You first mentioned Bitcoin, those kind of stocks. We can use those. Those are funds that you use for investments. They grow. The only thing with those funds is we need them liquidated into your account. So what I find with a lot of investors is that they don't want to liquidate it right away because they're going to lose money. They're figuring the longer I keep it there, the more money I make, right? But unfortunately for the process of the purchase, we need to see those funds already liquidated and into your account. Otherwise, they're not valid. Bitcoins, we don't have bank statements for account, and that's okay. We can use those. Okay, and it'll show the transfer, into the account and where it's coming from. So those things are helpful. So even if you save $10,000 and you remove $10,000 today because you wanted to purchase a house 3 months from now and you withdrew it to put it away so you don't touch it. 3 months from now, you can't come back and say, hey, Jen, I took out this money. Can I just deposit it back to my account? Would that work? No. How do we know that, you haven't been moving around these funds, in the middle of this time frame? Do not have a debit card for, you do not look at it. You just have it transferred into there and don't touch it. That would be a safer route for funds. Biggest mistakes made with savings: large cash deposits. Again, no random cash deposits into your account, no large cash deposits into your account. We can't trace them. The business that you have, if you have a business, funds are going into your business, you have articles of incorporation that you're the owner of your business, these are acceptable funds, okay? Or regular employment, you work for a company and you make this money based on the time that you put in. Those are acceptable funds. Gifts from a relative, I mentioned this before. For a primary residence, FHA, conventional, and VA, 100% gifts are allowed, except when you're purchasing a property that's an investment. Concessions from other parties involved. Although our market is very competitive right now, and obtaining concessions might appear difficult, there are opportunities that might show up, throughout the process. And if that's the only way that you can make your purchase, you purchasing $300,000 property and you only have $15,000, you need an additional $5,000, you can get concessions from other parties. Other parties could be the seller. Okay. The seller is a party that you negotiate with usually to obtain concessions. This might be something more for you if you're helping a relative and your mother or father or whatever purchase a property and you're giving them part of your earnings for your purchase. They can obtain that. There are max amounts though. Okay, max for FHA is 6% of the total purchase price. Max for conventional is 3% of the total purchase price, and max for VA is 4% of the total purchase price. I'm sorry, even if there's a credit that we're able to give you that goes part into the whole thing. So if you're getting a concession from, let's say you're getting the max concession from a seller at 6% for FHA, as a lender, I can't give you any more, even if you're, even if I'm able to, because you were maxed out at the total 6% allowable for Fannie Mae. And it all goes towards your closing costs. Only. It cannot go towards concessions, can only go towards closing costs. It cannot go towards down payment. Retirement accounts, if you guys have retirement accounts, you can use those. With retirement accounts, you have to find out with the company that holds your 401k and so forth to see what their terms are. Some of them will ask for you to create a payment plan to pay them back for this. So it's like a loan against the money that you put in. Others might allow you to use as much as you want towards your purchase, as long as it's a primary residence. So if there's a payment plan, we have to use that monthly payment against your income, and we look at debt to income ratios. So that's part of it. That's part of debts that we would have to add and determine whether or not you qualify, also removing those funds for your purchase. Stocks, we mentioned before, stocks and Bitcoin, these are great right now. There's a lot of people are using these, and again, you would have to liquidate them and we would have to see them in your account in order for us to be able to use them. Sale of property. So we have, sometimes scenarios, and maybe one of you guys are in this position where you want to sell the property that you currently own and use proceeds of the sale for your purchase. And you can certainly do that, and we can account for those funds as well, and do a simultaneous close. Is not the smoothest transaction, but it's not the most terrible either. It can happen. We've done it multiple times, but yeah, certainly we can determine that you're under contract. You're going to sell your home at a certain value. You owe so much on your home, and you're going to have this much, and we can use this, however much of those funds you want to use towards your purchase. So that's allowable. Sale of asset, that goes back to selling a vehicle. Make sure you have a bill of sale. Sale of furniture. That is a tricky one. You won't be able. It's going to be very hard for us to be able to source that. And then, last but not least, inheritance. You might find yourself inheriting money, either from a life estate so just having the court order funds from another country, we would need these to be translated. Obviously, that's the verbiage of the contract, and be able to use them. So.
What about in the case of life insurance?
Those are easy in a sense, or there's a lot of documentation, but those are easier because you can see where it's coming from.
Okay.
You'll see the wire take place, and
Okay.
it's usually an exact amount. I joke around. The government wants you to have debt. They want to see your record of payment. So it could reduce your credit score, okay, by some, but I will say that paying off accounts helps with reducing your debt to income ratio. Okay. So, if you have too many expenses that eat up more than a quarter of your income, the monthly expense eats up more than a quarter of your income, then you definitely have to start considering reducing those debts, saving some money to pay off the credit cards or a vehicle that's almost due, that's an installment, or maybe you have a lease and it's too expensive. The less debt you have, obviously, will open more space for a larger mortgage. And a larger mortgage means you qualify for a larger purchase amount. Okay, so and also take into account you pay off some of these debts through time. You actually or sell something. Again, I always go back to the vehicle because the vehicle is always the one that ties you up.
Yes.
It's one of the biggest monthly payments you have aside from your mortgage. You can potentially trade in your vehicle. Maybe you're not just paying it off. Maybe you just trade it in. And will your credit reduce by a little bit? Yes. But now you have less of an expense. You can potentially save more money, okay, for your purchase because now you don't have a $400 a month payment on that, okay?
The credit repair part is, I think, and you guys in the chat can agree, is the one thing that really is of concern to especially first-time home buyers. When someone comes to you, Jen, and they say, I'm ready, my agent sent me to you, and I haven't run my credit yet, or I'm working with a credit repair company. What are the do's and don'ts? What should I do? What should I not do? What can you advise? Because I think there's so many of those nowadays, and I feel like it would be great if you gave us just a brief perspective from a lender's point of view to see or to just let us know what is the best way to go about that.
So when somebody tells me that they've been working with a credit repair company to improve their credit, and that their credit has increased, I'm going to be completely honest. You know, when the credit repair company starts disputing your accounts, your credit will go up because it's in dispute. The accounts are in dispute. So they're not accounting for the derogatory against you. Okay. Until those disputes are addressed and final, we don't really know if your score has truly increased in a positive way. Okay. So my advice is always to reach out to the bureaus individually and ask them to remove all disputes and all dispute remarks going on in the process, and ensure that there are no disputes at the moment, because it will affect your credit. It'll give you a false sense of credit. The agent that's doing the credit repair, I would speak to them and ask them to stop the disputes, stop any future disputes, because you want to start the process of purchasing. With that being said, although kind of gives a negative energy towards the credit repair companies, they do work. Okay, so credit repair companies do work, but only in accounts that they can prove that there's a discrepancy between the reporting agencies individually, because they each have to report almost equally. Okay, they have to, the reports really, it has to be true. So therefore, if there's something wrong that or something off on your derogatory accounts, then they can play off on that. You know, oh, the credit report is wrong, or the name is different, or you know what I mean, or something like that. And that's how they play with the law to remove any derogatory accounts, is because, you know, the CFPB it specifically states that these reporting agents need to report true balances, true account details. And I also advise the clients to do things that help improve their credit. You know, yes, one thing is removing derogatory and repairing credit. The other thing is improving your credit. Improving is, you know, your credit. You can either, you know, get a cash advance card, you know, where you pay a certain amount of money in advance for a certain amount of credit, and then you use it, and then you pay it back, and then you use it, and you do that for a certain period of time, and then that helps you build credit history. You just have to make on-time payments. The other way that you can go about it is if you have a family member, relative, spouse that has an account that is in good standing, has been existing for a long period of time, has on-time monthly payments, it has a decent balance, it's not full, you know, maybe ask them to add you as an authorized user. You know, they don't have to give you an account, a credit card or anything like that, but add you so that you can obtain, you literally adopt the credit history of that account into your account. Okay. If you guys have children and you have good credit accounts that are in good standing, this is how you help your kids also start getting credit, you know, making them an authorized user on your credit cards, and they'll start having credit early. But as long as you're in good standing, if you're not going to be in good standing, you're going to hurt them. Those are different factors that you can use to help improve your score. I can bring a credit expert that I know also and help with that. He is definitely very knowledgeable. The best way of saving money is not to lose it. Okay, so I wanted to point that out because a lot of the people that are on this chat may be renting right now, and one thing you're doing when you rent is you're really not going to gain back this money. Okay, and yes, renting is a good starting point, but start getting prepared for homeownership. You know, start putting money away in order for you guys to get into homeownership, because when you rent, you're paying off somebody else's debt. And not only are you paying off somebody else's debt, this asset, this home, gains value through time, which is the time that you're investing in that home. Okay, so my advice to you is to get ready, get prepared. If you have questions and you need a guide, let us know.
I feel like today's discussion has been very helpful and eye-opening because, when you talk about saving for a home, most people are like, oh, I just need to put away money. But what kind of money, and how can you prove that that money is really yours, and where did you get it from? So I feel this was very helpful to just understand that it's not just savings. This money has to be traceable. What kind of money is acceptable for each stage?
The closing costs are going to be more or less, and this is just a rule of thumb. It's not exact. It could be less, it could be more, depending on the property, their taxes, or the insurance you obtain on the property. These things could change the closing costs. But rule of thumb is also another 3%. So purchasing a $300,000 property, you're looking at about $18,000-$19,000 that you're going to need for that purchase. Okay, it could be a little bit more, again, depending on the taxes and insurance of the property.
Do we have any questions in the chat? Can you please get the credit repair person on? Yes, sure, Michelle, we will. Jen, you better get on that.
I will. Okay. What is a realistic time from saving to getting the house? How long will it take for you to close? I send you a pre-approval. You're ready to go. You're looking at houses. The moment you go under contract, it could take about 30 days. And believe you me, this is a very short time because, by the time appraisal and inspections and all this, time goes by so fast that and now you're scrambling towards the end of the month trying to figure out, how you're going to finish packing all these boxes to move. So 30 days is more or less the timing. I usually advise to give 45 days because every scenario is different. So that would be with the realtor. I would ask the realtor, beg them, please give us 45 days just in case, because you just never know how long an appraisal could take or negotiations for you guys. But it shouldn't be more than 45 days from going under contract to closing.
Another question, I think, Jen, check it out.
Yep. And so the other question is, what is a good credit score to be able to buy a home? A credit score. So for FHA, we can go as little as 580. Okay. Now, with that being said, at 580, your credit score, your interest rate could be higher. It's going to be higher. The only thing is that what really it boils down to is if you have a credit score of 580, how much would you qualify for based on your income? And are you comfortable with those monthly payments? Okay. Because the interest rates essentially are still a significantly low amount. And later on in the future, you can refinance once your credit score is improved. Okay. Now, ideally, I would say try to bring your score above 600, 620, 640. You're going to be in the FHA program. If you want to buy with a conventional loan, then, 660 and above would be ideal situation. And essentially FHA is more flexible. So there's more room to work with, whereas conventional, any little thing could throw you off.
The insurance that comes with that.
Yes. So with the programs, both conventional and FHA have mortgage insurance. Okay. Conventional will have mortgage insurance if you're putting a down payment that's less than 20% down.
Yes.
But the mortgage insurance does get removed on a conventional loan after you have obtained 20% equity. Okay. Or you refinance and you know what I mean? And all of a sudden you have a better opportunity because you have a higher, the value of your home is probably better as well. Okay. So that's one with conventional. And then with FHA, mortgage insurance is lives throughout the entirety of the loan. So you don't get rid of it unless you also refinance and go into a conventional loan because you've obtained a certain value for your home already and 20% equity. So, essentially you can still remove it. And I do speak lightly on refinancing. I will note, because I like to be completely transparent, yes, you can refinance in the future, but refinancing also has its costs, similar, like closing costs, similar to when you're purchasing. There's no down payment, but there will be closing costs. You don't have to pay it out of pocket. It gets rolled into the loan. So your loan does increase by a little bit. But the idea with refinancing is to reduce your monthly payment. So if it reduces it significantly, then at that point you can make your choice, you know. But it is an option that you have in the future. Should you have a credit at 580, 600, or whatever, and your interest rate is a little higher right now, but you qualify for a home and you find the home, then that might be the route for you to start with. And at least you're putting money into your home, building equity in your home, and you can make choices in the future to better your situation.
How many years of bank statement would you need?
How many years of bank statements would you need when getting ready to buy a home? All I need is the last 2 months, which is why I said, you know, have your whatever funds you have in your account for at least 3 months. Now, there are times where we may ask for additional bank statements, like if you're receiving child support and we're using child support income to help you qualify, which we can, or you know, then we need to see that you've received child support for the last 12 months. So we're going to need a transaction history showing that. You know, a lot of times I tell people to just summarize the transaction history and only show the payments that were made to you as child support, so we don't see all the history. But you know, those are things we can work on. Oh, okay.
Employment. You're gonna need to know the employment history. So do they need to be working for the last 1 year? When it comes to home buying, what do you look for?
Okay, so what we need is a 2-year work history, but that doesn't mean that you need to be in that with that employer for the last 2 years. We just need to know that you've been working for the last 2 years. And if you had a gap in the last 2 years, what was the gap for? Could it have been COVID? Could it have been that you were sick, you had an accident, you know, or you were studying? You know, those are acceptable gaps. But if you can show a work history of at least 2 years, that's what we look for. Now, if you have new employment, we need at least 30 days of pay stubs for new employment, but it has to be a full-time employment, okay? And you know, and for 30 days, it has to be within the same industry. If it's not within the same industry, it's better if we have at least 6 months of employment, okay? If you're using part-time employment, we need at least 6 months of employment history with that employer as well.
I would love if we made a checklist for, you know, some of these things that we spoke about today. They can easily check it as they go. As you get prepared, you have your checklist, and you know, you're ticking the boxes. You check your employment history, all that. So just a summarized one.
I might already have one, just for myself, for what we've searched for. I would be, if it doesn't have too much lending lingo, I'll share it. So what about business owner, or is that considered as self-employed? Yes, business owner would be considered as self-employed. So we would need at least 2 years taxes. If you have at least 5 years self-employed, we can use 1 year, the most recent year. I would say before you file taxes though, talk to, you know, you can call me and I can review your taxes, and then we can say, okay, you know, this is, if based on your specific scenario, you might need to show this much income. Because we don't go based on the gross, we go based on the profit. So if you're expensing too much, then you might put yourself short on income. Even if you are right now in a position where you don't know where you are, or where you just don't qualify right now, it's okay. What we can do is review everything. Like, you know, it's better to fly with a plan, you know, with a true director, a true direction of where you're going, you know, where you're going to land, versus just flying up in the air like a butterfly, right? And you know, I'll use butterflies often in my presentations for personal reasons. But you know, what I like to do is, even if you don't know or think you qualify, I'll review everything. As long as you give me the opportunity to run your credit, review your income, review everything, I will look at your entire scenario and say, this is what you would qualify for right now, or you don't qualify right now, but this is what you can do to qualify later on. And I'll give you an entire plan. I'll put it in an email, it's, you know, and then all you have to do is follow that plan. And once you finish following that plan, you come back to me, hey, Jen, I'm ready. And for sure, you'll be prepared, because you already know based on your specific scenario. And if something changes throughout the process, you just tell me, and we'll readjust the plan, you know. But you know, I want you to use me as a resource to understand that I'm here to help you, you know, and to take you from not knowing where you are and wanting to purchase a home, to actually like having true direction and getting there and buying your home.
How much does it cost me, Jen? If I give you a call, are you gonna charge me? How?
A lot of lenders don't do consultations in that aspect with, a lot of lenders want to do it now, run credit now, and see if you qualify now, and kind of just like leave it at that. And then if you don't qualify, they put you down. I have earned my business and my relationships through time. We are in a business of relationships, and there's no charge in speaking with me. There's no charge in running your credit. There's no charge in checking everything for you and giving you a plan. Like I actually have a simulator that'll tell me what you can do with your credit if there's room so that you can improve your score. Like I have these resources to help you guys. And I build relationships. I have clients that come to me after a whole year, 2 years of working on whatever I told them to do. And now they qualify and they're ready. And that's my goal, is to be able to put you in that position.
There you have it, guys. It doesn't cost you anything to even call me as well. I will not charge you anything. In fact, the real estate agent is the last person to be paid. If you end up using me and Jen, or you end up using someone else, you're an informed buyer. You're not just going in blind.
So Diana asked, would running my credit affect my credit score? So we run the credit one time. We're not like an auto dealership that has multiple lenders and we're running credit with different people. Okay. Mm-hmm. I will say that it will reduce your credit by, 3 points, 5 points at max. But you have to take a chance. If you don't take the chance, you can't walk away with the cheese. You know what I mean? You have to take a chance. And the chance in me running your credit, I'm not running your credit just to get you pre-approved. And if you don't qualify, run away. You know what I mean? My goal in running your credit is to get you to where you need to be. If I was the alternative, then yeah, it'll affect your credit, and then you'll walk away with absolutely no information. But my goal to do this is to tell you, okay, you're in this position. Now, if your credit is really, really, really bad, then what you need is the credit repair situation. You need cash advance cards. You need to be added to somebody's account as an authorized user. You need ways to improve your score. But how do you know if we don't run it? If we don't figure it out, if we don't see it, if we don't see what your debts and your derogatories are, and that's pretty much, why I have to. If I don't do that, there's no way for me to guide you.
So don't be scared of losing a couple of points, and in return, get a plan that works for you and your needs. Because remember, not everyone is the same. Your financial situation is not the same as, my financial situation. So you gotta allow yourself to invest the time, use resources like Jen, get to where you want to be.
Right. I want to thank all of you guys again for joining us. The next show should be working with a lender, being prepared, what's needed, the type of knowledge you should have, the lingo. I'm going to teach you guys a little bit about the lingo, because that could throw you off, and we can speak in acronyms and you guys will go crazy. So I'm going to teach you some of that. And then I'll try to get this credit repair person to join us in one of our sessions, and we'll let you know when that'll happen. But again, thank you so much for your time. And I hope this was useful and it gets you more prepared, and reach out to any of us. My phone number is 305-401-2778. I put my email on the chat as well. It's jennifer.kurz@roundpointmortgage.com. Make note, my name Jennifer is spelled weird and different. And then of course, Floyce, you can always reach out to Floyce. She is the go-to to look for properties. She has the knowledge of the market. She can search for you guys. Once you're ready as well, she can get on the road to help you and negotiate on your behalf. Floyce, I don't know if you wanted to share your phone number once again.
Yeah. All right. So thank you so much again, guys, for coming. I really appreciate you taking the time. We've gone over slightly 1 hour, but this has been very helpful, interactive. I'm looking forward to the next one. I've learned a lot as well, as much as I know some of these things Jen is saying, but this has been a learning experience for me, and I'm so grateful for this opportunity. And I'm looking forward to many more. My number is 754-215-1911. And you can always find this content at New Homes in South Florida. Thank you so much. It has been a pleasure.
Have a wonderful day. Thank you for all the information. I am so grateful.
That's awesome. See, this is great. We want to hear more. Thank you so much, Michelle.
Yeah. Thank
You
you.
are very welcome.
Mhm.
Thank you so much. It was a very great nuggets that you have poured out. And I will be contacting you soon, Jennifer. I will be contacting
Let's
you
do
soon.
it. Let's
Thank you
get
so
to
much.
Angel home. Thank you, Shirley.
Bye-bye.
Thank you so much, guys. I'm actually learning. I don't know anything about home buying, but I'm grateful for everything.
Don't worry, we got you.
Thank you, Diana. Diana says thank you. Thank you so much.